Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live 888-994-4995, Studio A.
Hi everyone, and welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about how to help you make some money, save some money, how to navigate this crazy world that we live in, and today we're going to do a little bit of a group session on insurance and mortgages. So we have Brendan here with us today to talk about insurance, which everybody needs a mortgage person when you're getting insurance usually. And then we have Fisch from Nationwide Mortgage here today talking about mortgages. So welcome guys, how are you?
Good. Thank you so much for having us.
Thank you for being here. It's always a pleasure. Although I know a lot about the two things, I learn so much more every time we talk. It's been a crazy world to navigate, and I want to say that they're both so open and welcoming and always available anytime that we need help. So I want to thank you guys for that. So
Absolutely.
Just for our audience to know that if they are thinking about refinancing, you're the guy to go to. They're thinking about an equity line. If they're thinking about hard money, and people are like, what's hard money? Like, what does that mean? It's kind of like when people would say a short sale, which it's not really short, right?
Yeah.
And then they're just looking to get a regular mortgage to buy their, I like to help get them out of their old dream and get them into their new dreams, right?
Yeah.
So, and you are a big part, Brendan, in facilitating that process, because sometimes without you, there is no mortgage to be had because the lender's going to say, you're out. So let's first talk about hard money and talk about how insurance affects that as well, right? You guys would know a little bit more about that. I do have people that call me, and I did not know, Max, that you did hard money. So it's great to know that you have that in. Why don't you tell us a little bit about how that works?
Yeah, so hard money it's a really cool option to have, right? And I think that for any lender who obviously people are coming to for financing, they should have access to different types of lending, right? Not everybody is going to fit the box of conventional FHA, VA, those main loan types. So with hard money, pretty much what it is it's a pool of investors that get together and they evaluate risk. So I tell a lot of times in the mortgage space, right, there's two things a lot of the times. You have conventional loan guidelines and regular underwriting guidelines, and then you have common sense, okay, right? And those two things don't always overlap, right? Because these lenders have to draw a line in the sand. Here are our guidelines and we're gonna stick to them. But sometimes common sense doesn't really come into play. So what we try to do is we try to offer a hard money route where common sense is pretty much the underwriting guideline. What is the value of the property? What are you looking to do with the property? Are you looking to flip it? Are you looking to long-term lease it? The key with hard money is that there needs to be a clear exit strategy, okay, right? Meaning, how are you going to get out of this loan? Because the idea of the loan isn't to have the loan for 30 years. The idea is to have the loan for a short period of time, whether that be for a flip, right? Or that be for investment purposes while you're fixing up a home where the home couldn't, otherwise qualify. And it's for people that want to do one or the other, but they might not have the credit currently, or they may be getting a job 6 months from now, but they don't have one, right? And so a clear exit strategy is really important when you're talking about hard money too.
So when you talk about hard money and you're talking about the exit strategy and fixing up a property, it might not have a kitchen. So does your hard money lender require insurance?
No.
Really?
Yeah, we do not require insurance.
That's not good for you, Brendan.
We don't require insurance in the short term. However, like I said, with the exit strategy, if your goal is to renovate and keep the property, whenever you exit out of that hard money loan, typically it's 12 months or less. Okay. Whenever you exit out of that hard money loan and get into a more traditional loan product, which would be the exit strategy, obviously at that point you would need to have an insurable home to be able to exit out of the hard money and go into a more traditional loan type.
Now, I personally, as an investor myself, would highly recommend like getting a builder's risk policy. You want to tell our audience a little bit about a builder risk policy, and I believe sometimes when we need to kind of keep ourselves in a parameter, sometimes the lender will allow a builder's risk policy as a less expensive avenue when getting a regular loan. Is that correct?
Yeah, so the key with builder's risk, and I'll obviously let Brandon talk a little bit more about the ins and outs of those types of policies, but on the lending side, the key to builder's risk is that it needs to be for 12 months. So a lot of builder's risk will be 3 months, 6 months, 9 months. But in order for a lender to accept it for a traditional loan, whether that's conventional, FHA, or VA, it needs to be for...
Now, I've bought a 12-month one before. However, the catch is it's not refundable.
A lot of times they're not refundable, yeah. So there's something called a minimum earned premium, which can be 25% of the policy or 100%. And so depending on what that is, that's where it gets a little bit tricky. And so having an insurance agent that knows where to look for those things becomes really important. In addition to that, I've worked with other hard money lenders that do require insurance. And so the fact that Max doesn't can really help somebody get into the house or get into their next dream, which is really important. And so builder's risk policies can really have a lot of fluctuation in coverages. Any policy can, but even more so with a builder's risk policy. And so it's something that I certainly like to go over with clients to make sure that they understand kind of what they're getting into.
But that's also a good policy to have when a property's sitting empty and there's nobody in it, right? That would be the preferred, because typically, which I think most people don't know this, is that when you get insurance and you say it's going to be a rental and there's nobody in the rental, right? That's a problem for long term.
Yeah, so in that case, I would get a vacant policy.
Okay.
So it's just a different...
How does that look? What does that look like?
It's just a different type of coverage. So basically all an insurance policy is it's a bunch of papers stacked together that has wording of what they're going to cover and more so what they're not going to cover. And so a vacant policy, those forms in that policy are just going to look a little bit different. It might be cheaper, more expensive. It really depends on the carrier. We haven't gone into this previously, but there's a lot of different types of policies outside of your normal homeowner's policy or condo owner's policy. So those are HO3, HO6, but there's also builder's risk, vacant, different types of dwelling policies, HO3, HO5, HO8, DF1. So
oh my goodness.
There's all these different things.
Do we have like a periodic table chart like for this?
It's called the alphabet.
Yeah, there almost could be, but there ends up being a lot of different options to explore, and it kind of goes like with what Max said of there's common sense and then there's underwriting. Same thing in insurance, and so we try to find the best route for the client.
No, we're going to go to commercial, and when we come back, we're going to continue this conversation. So stay tuned while we go to commercial to check out our wonderful sponsors' commercials. Be right back.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fisch, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fisch is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fisch today at 954-729-6933 or max.fisch@nwmcorp.net.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FIRPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at lauraess.com. And now back to the show.
Hi everyone, and welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. We're here today talking about insurance and mortgages. We're doing it because really you need real estate agents, which that's me, and if you need me, give me a call, 954-650-0827, or you can check out my website at lauraess.com. And without realtors, we also need the mortgage person. And I hate to tell you, with a mortgage, you're not going anywhere without insurance. So you need all of us in order to complete a transaction. We do need title agents, but they're not one of our sponsors. So guess what? They're not here. No, I'm just kidding. They are. They're just not here today. There's a lot of people that are needed in this whole process in order to, get the whole thing done. So any kind of recommendations that you have based on insurance?
Well, one, I think it's important that you're working with a broker, an insurance broker. So the difference between a broker and a captive agent is a broker works with a bunch of different insurance carriers to try to find the best product for the client. So working with a broker, I think, is extremely important. Two, I think working with somebody that understands the nuances of the Florida market and the nuances of insurance itself. Because there's so much complication, a lot of people think, well, hey, my insurance is this price and my neighbor's is this price. There can be so many things in an insurance policy that can be changed outside of just deductibles, which is what most people think of. So many little things that can be changed that can really change the coverage and the policy and the premium a lot. So making sure that you have an agent that's going to go through those line by line with you to make sure that they're not just throwing it against the wall hoping it sticks, but that you know what you're paying for.
And what's a good way for somebody to contact you if they're looking for some insurance?
I work by my cell phone all the time, weekends and evenings as well. My phone number is 954-326-9842. And you can text me, call me anytime.
Okay. So Max, how many hard money loans are you doing on average a month? And who is the recommended person for this?
So to answer the first question, we're doing probably a few a month. I would say between 2 to 6.
Oh, wow.
Yeah, a month on average. Right now, the ideal person to, always, I shouldn't just say right now, but the ideal person to do a hard money loan would be somebody who wants to flip a property, right? Because you just need a short-term loan. Hard money loans are interest-only payments on a monthly basis, so the payment on a monthly basis is typically a little bit lower. You're not paying any principal.
Okay.
So the loan type itself really gets home flippers. It gives them the ability to have a short-term loan and not have to pay for all, typical closing costs that are associated with traditional financing. And it really helps them on a monthly basis on a cash flow perspective, when they're flipping a home. So, and a lot of the times with home flippers, they don't want traditional appraisals because there's something with the house that wouldn't pass a normal appraisal. So all of those
no
things.
kitchen.
Yeah, like no kitchen. So all of those things combined make hard money very marketable for people that want to flip homes. That would be the ideal person.
I have to tell you, yesterday I went to go show a house, and the house said it was completely remodeled. I get to the house and I look, and of course there's a sticker right on the door. So it's been deemed unsafe by the city, right?
Geez.
And so, it's a hot mess outside. Like there's a refrigerator out front, the stove is out front. It looked like they were trying to build a kitchen in the driveway, right?
Yeah.
What cracked me up and what made me say, and sometimes I think I'm funny, but I was like, the board will send me an email for making a 5th room because it has no closet. It has a window, it has a door, but there's no closet. Like they took it out, it's easy to put it back. But this person wrote that this house was completely remodeled. And I was like, and I get in trouble for putting that and I write, the den is a 5th room with no closet.
Yeah.
And I get in trouble. But that house was like the perfect house, like literally no kitchen.
Yeah.
But there's other ways though to finance those kind of homes too, right? Which is called a 203K.
Yeah, so there are renovation loans, absolutely. The pro, and I'll talk about the pro and con to that type of loan. The pro to those types of loans is that the bank allows you to finance in any future renovation.
Right.
Right? And so that helps with people that A, don't have the money to renovate, or B, love a house like you're saying, and you can't get traditional financing because there's something wrong with it, right? It allows you to get traditional financing with the expectation that you're going to fix whatever's wrong with it within a certain period of time.
Right.
Okay. So that is the pro of those types of loans. The con is that if you have a cousin that is going to help you do some of this work for cheap, you can't do that. You have to look there's a panel of approved contractors that have been approved by the bank that you have to use. So a lot of the times it can be a little bit more expensive because typically people have somebody that they know that'll maybe help them on price or do something, a little cheaper.
Are those people controlled?
The bank approved contractors?
Yeah.
They're not necessarily controlled, no, but they've been thoroughly vetted, and everything is going to have to be through the permitting process. Everything is going to be checked and signed off on and made sure that every I was dotted and T is crossed.
And how does insurance work on the 203K loan?
Well, so insurance companies, a lot of times they'll inspect a property, not always. So if they go to inspect the property and there's no kitchen, they're going to say, what's going on here? It's going to come down to...
Bank gave me a loan.
It's going to come down to two things. What the bank requires...
Would the bank do a builder's risk policy?
You can do a builder's risk policy, as long as it's 12 months. So
we can do a 12-month builder's risk, or sometimes you can do like a DF1 policy I spoke about. So that's
What's a DF1?
It stands for dwelling fire. So it's a very just bare bones policy. So in insurance, we have a couple different types of policies. One would be an open perils policy, and one is a named perils policy. And so a named peril is going to name the perils that it's including. Let's say windstorm, fire, water, whatever it might be, or that it's excluding. And then an open perils is going to pretty much cover everything, except it's going to exclude certain things that are named in the policy. And so it just kind of comes down really to what the bank is okay with. But a lot of times your best bet there is probably going to be a builder's risk policy. As
an insurance broker, for yourself personally, what would you do as the least amount of insurance coverage? Like, would you do something like that, a
DF1?
Yeah.
I would do a DF1 on my own home, but everybody's risk assessment is different. And so, they have to decide, I'm comfortable with not having my personal property covered or not. If you
don't get much for it, and you got to really prove what it's worth, right?
Yeah, you have to prove what it's worth, and this is hardly ever talked about, but there's two valuation methods in insurance. There's what they call replacement cost and actual cash value. So actual cash value is replacement cost minus depreciation.
Well, that's a question they ask you when you're doing it, right? And there's a cost difference in the policies, right?
There is. And so do you want the depreciated value of your furniture, which you're going to have to prove, or do you want the replacement cost? There's also functional replacement costs. A lot of carriers don't do that, which is where they would replace it with something maybe used.
Well, let me ask you a question. So I went on a listing appointment about 3 weeks ago. Lady said to me, I want to move because she said to the neighbor, hey, listen, I really don't want your kids. Her house is a corner lot. And funny enough, they had a fence there years ago. They're the original owners. And the fence would come all the way around, right? It was a big lot, right? They took the fence down because they didn't want it there. Now they want to put it back, right? So now they're going through all the processes to put it back. And the kids are all in the neighborhood are all playing on that grass.
Okay.
Now, if the kids were to run and trip and fall and knock out their 2 front teeth, right? She feels like she would be liable because it's her property there, right? Mm-hmm. I think if she never said anything, nobody would have even known it was hers or not. But that's where you have more risk, where that DF1 would not make sense, right?
It depends on the amount of the liability coverage on it. And so, again, this is something that can be added or excluded on a policy. It's almost like when you go to a restaurant and put different ingredients on the sandwich you want. It's the same thing, but insurance has never been talked about that way. It's always been talked about as like, here's the dish, not the ingredients that are in it.
Well, okay, which now I have to tell my customers, hey, like you need to look because you're only going to get water coverage of like $10,000 if you get any water coverage, right?
Yeah.
But I was talking to another customer who had just sold them a house in Cypress Head. Well, when the husband was outside, a dog bit him. Do you know what I had sent them to an accident attorney. You know what he told them that the most they could get? $10,000.
Yeah, so animals get a little bit tricky because, one, there's a lot of carriers that will exclude, especially certain dogs, maybe some of the bully breeds or German Shepherds, things like that. So you're not going to get any coverage if you have one of those dogs, or you can sometimes pay for extra animal liability coverage. So if your dog gets out and bites someone, you can be covered there. In addition to that, one of the products we sell is an umbrella policy. So you can get over and above the liability on your auto and your home, what I call extended lawsuit protection. So you can get an extra $1 million to $10 million in liability coverage for these type of scenarios.
I definitely would want to talk about that, but obviously, as always, time is running thin. And I definitely want to come back and talk about the liability, like, why the attorney would have, said don't sue. It wouldn't make sense. I mean, how do you not know somebody has that policy? You don't know, right?
You don't know.
So
that's
why
where
wouldn't you
attorneys get
personally
involved.
sue them? But they were saying something about limits in Florida. So I don't know. That's definitely something very interesting. And Max, did you give a good way to get a hold of you if somebody needs that mortgage or that hard money?
Yeah, so I'll give my home address so you can come knock on my. No, I'm just kidding. No,
He lives in? I'm just kidding.
At any time, you guys can call me at 954-729-6933.
All right. Well, I want to thank everybody for listening to Making Money with Laura Sanders, and we will be back again next week at the same time, and look forward to we look forward to you listening to us then. So make it a great night, and thank you for listening. Bye.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you next week.